a good example of a stock in tech that's underperformed, and the stock comes down, and it's attractive to Rob Sechan. It is CRM, and it is Salesforce, which is down 6% year to date. There aren't very many tech stocks that are down year to date. This happens to be one of them. It sticks out like a sore thumb on my screen. Rob, why'd you buy more Salesforce?
Well, a couple things. Number one, we sold our Lulu position. This is Friday. We bought it. We bought it at about $252. And after a tough Q1, they had a nice bounce back in Q2, beating estimates, giving solid guidance, and seeing some traction in their AI assistant, which would be a catalyst to restart the top line momentum. So, we built a half a position in July. We're up on the name. Built a half a position in July, added more to it last Friday. I think we're a little down on that buy at 252, but it trades at 25 times, which is a healthy discount to its software peers and very discounted to its long-term average. So this whole notion of volatility creating opportunities to upgrade the quality of your portfolio is something that we've embraced. And we did the same thing with NVIDIA, if you remember.
Yeah, I do.
Yep.
I do. Let me get Carrie's thought, because she owns Salesforce. What do you think about buying it here?
I'm glad you're buying it, Rob. I think it's a good idea. All of these software names have been decimated in this market as money moved to AI. It didn't leave technology, it just moved, and some of this is going to come back. Plus, they have the ability to raise margins significantly. They started to do that. They've cut costs. We think that's going to happen. And on the revenue side, they've been through a soft patch, which was true of all of their industry. And we think that's starting to return because people need the CRM systems that Salesforce sells.
Hey, don't sleep on another big important name reporting. It's tomorrow in overtime, and it's Broadcom. NVIDIA gets all the air, all the oxygen, but Broadcom is thought by many, including the top analysts who cover these stocks, to be the second best way to play AI through semiconductors. You own this too?
Yes.
We got to pay attention to this one tomorrow.
Oh, absolutely.
Now, especially.
Yes. So I would say with Broadcom, it's in the chip business. They were in intelligent chips, but they have a broader, no pun intended, business. And the earnings report should be good, but the market could sell off because what we saw with NVIDIA could happen to Broadcom. We think that's a buying opportunity. This is one of the largest names in the S&P now, and we believe that it should be, because it just transcends the market for intelligent chips, and everybody needs to buy them, whether it's from NVIDIA, which they can't get supply, or Broadcom.
Some peaks and valleys, obviously, in the year chart that we were showing you there. Let's throw that up again, if you guys could. The year-to-date move, it's up near 40%. It's had a nice run. Rob, you got this one, too.
Yeah, Scott, we added it in April of 23 on the show, and it quickly went up 150%. Remember, we used that as a proxy for our NVIDIA exposure at the time because we thought NVIDIA was too expensive. We trimmed this Broadcom in early May because of the valuation it got to, and it was probably our second largest holding at the time. We're going in, and consensus is expecting 47% revenue growth and 15% EPS growth, and it's because of the demand for their custom chips and the success of their VMware acquisition. And remember, this is a company that has a history beating 90% of the time over the last 10 years, and we expect there to be healthy demand for their chips, as evidenced by what we saw in hyperscaler CapEx.
Did you have something you wanted to say relevant to this before we take a quick break?
Relevant to this. I think, first off, I want to slightly disagree with Carrie. I thought NVIDIA's quarter was just fine. Okay, and I expect the same thing from Broadcom. That's how it's relevant here. I mean, if people had lofty expectations, whisper numbers above what the guide and beat was from NVIDIA, that's their problem. And the same thing may happen with Broadcom. But on all of these stocks, you're looking at multiples that, in my opinion, and it's going back to something you said, Scott, at 30 times earnings, NVIDIA, and I know we're talking about Broadcom, but NVIDIA is the bellwether here, is attractively priced for a long-term earnings growth rate of 28%. Now, asterisk to that. 2 years from now, there's no way it's growing at 28%. But for the next 3 to 4 quarters, highly likely. PEG ratio of 1.2 applies to Qualcomm, applies to Broadcom, applies to AMD. These stocks are not expensive. There's just been a sentiment whoosh here that's likely to reverse well before year end, reverse to the upside.
Sure, but I mean, you used the words it was just fine. And what we're learning here is just fine is not good enough when your stock and your valuation have expanded.
It wasn't just fine for the market.
For the moment, yeah. Over the last 2 weeks, fine. Over the last 2 weeks, I think that NVIDIA will set a new high before year end. I know you. I suspect you agree with me. I suspect you agree with me.
Before year end, all right.